Hello everybody, here's a French Bull. I want to do a little video to show you a bit where I stand on the Elliott wave currently. So this is first time for me. Please bear with me with my English, my accent. I will try to do my best. So, um, for now, for me, we assume that we have the end of this correction here. And I think we started in impulse here. We did have a pullback for a 2 here. We tapped out for a third, and we're doing the fourth wave narration of these two. We do have a good RSI to confirm this. Here we see how it came from oversold to overbought with a divergence between the sub, third, and fifth. Wave 2 came down nearly in oversold territory here. And we did a third wave that overshoot first RSI top was the first wave and did a divergence as well here between the third and the fifth wave. And we do have a deep retracement of RSI that we can compare to this one. So for me, it looked really good as a fourth like this. And we do have a good volume here that we usually expect for a third wave. So here we have the third of the third that got the biggest volume. I will take the count that I already made here. No, first I just wanted to show. One could say we did an A here, a B, and a C here. We did the correction here, and we finished our impulse, and we started a bear market now. Really, I don't think this is most likely, because on this part here, you can still force fit a corrective wave, but it clearly look like an impulsive. I do have I have to take a smaller one, but here we do have a 1, 2. So it's a bit funky first wave here. That would probably leading diagonal. I zoomed in, did the count sub count in this, and it worked. Here you have a 1, 2, 3, 4, 5, and here you have to zoom in more. But we have a good 1, 2, 3 here extended. 1, 2, 3, 4, 5. A fourth, a third, a fourth, and a 5 here. So I will dip a bit more into this if you're interested on another video. But right now, we assume that we finished our big third wave. And I see the count like this. This is a funky part to count as well, but I probably have some kind of leading diagonal here with a very shallow 2. Got a third wave, a triangle for a fourth wave, and a fifth that's finished our first impulse, a very shallow 2. That's not really common, but that can happen. That's when MicroStrategy bought in, so it can be explained by news. And we got our nice impulse here, make a third wave, and we have a fifth finishing here. Same here, we could count this other way, but for me it looked like a nice ending diagonal. The fifth wave didn't really come to the trend line, but that's normal. We often got undershot in Elliott wave in this kind of cases. I'm going to take out log to see the retracement where we are. So this fib, I took it from the low of 2. I'm going to take out volume, we don't need it. I take it from the low of 2 here to the top of the third, at least the purple third. And we can see here that we retrace to 50%. Usually for wave 4, we expect between the 23% and 50%. Can come lower, but usually it's between these two. So in terms of retracement, it's already correct for. Now in terms of time, I took this, I took the length of the wave 2 with the fib trend-based fib time. So the length of the wave 2 projected from the end of the third wave, which means here during this correction we didn't do yet 20% of time than the second one, and that's why I think it's a bit too quick to be done. It's possible, but I think it's too early, and after such a heavy retracement I would expect more consolidation. I would expect the market to take some time to find the balance, test supply and demand in all this region. So yeah, I'm gonna hide this for now. Not need that neither. So now if this is part of the fourth wave but it's not done yet, and we already reached the retracement that we can expect, there is several possibilities. We could be doing a flat. A flat, it's an ABC, but an ABC that starts with an ABC. Because an ABC, like the one you see here, as a zigzag, you got 5 wave down, corrective, and 5 wave down for the C. A flat, you will got an ABC for the wave A, got a corrective, and you end with an impulsive 5 wave down for the C. So I'm gonna put this in higher degree, this one here, and show the wave. For a flat, we need to correct at least 50% of the drop. Don't see it here, obviously. 90% of the drop. So the retracement should come at least to that level and can go up to 123. So it can take a new all-time high up to here. It's 73. Okay, and if we come up here, it doesn't mean the correction is done. And this could be a really nice bull trap. As you know, sentiment down here is really low. A lot of people have been selling at loss, especially the one who bought in this region. And the institution and ones that bought here and sold here are buying back here. So that's pretty good sign for the bounce. And so yeah, we know that sentiment is really bearish right now. You can see that on there are several websites that show sentiment, or that do some calculation on that. You can also look at a funding chart on Coinalysis, for example. It will also show you when you got low funding it usually means that the market is pretty bearish, and when you got really high funding, it means that it's really bullish. So I will so that's why I expect the correction to continue up for a few weeks again, and yeah, and we also can expect that when if we take that level here, we'll start to change the market structure again, and there's a lot of chance that the market come back bullish again already. Probably when we take that region already, that will be pretty quick. But if we come back up here above 45, 32 will be a first sign, and if we can claim 45, you'll see everywhere on Twitter that sentiment shift weekly. So that could be a really good bull trap to go up here and or even take the high and the all-time high and come back down to finish the wave C. Target for flat. Target for flat, I'm gonna skip this, is between 0.618 and 1.618. I'm gonna take this out. So between this, we can add this one too. Can I put this in white? Okay. I'm gonna take this out. Okay. So depending if we stopped here or here, we can expect the correction to finish between 40. If we go up here, it would be 51 down to 16 or 5k. That's really low. I would not expect that much. We can't. There's one thing that we should not see is a breach of the top of one. Wave 4 in a classic impulse shouldn't breach this. So that's a low target. But I don't even expect this right now. If we take the high, there is even greater chance that we will never breach the low of A, as it shows trends in the market, and yeah. But even if we stay here, for example, just we do a double top, for example, I would expect this to end at 0.618. It can even sometime stop shorter, can add the 0.50% here. And that will be really sensible if we look at just from a classic support resistance point of view. If we reclaim that level, it should become support again. So that's one of the scenario of flat. So is a running flat if we take the high and don't breach the low, or an expanded flat. We could still just make something like this. That will be really, really funky, but you know, just take the low here and come back up. But first we have to concentrate on the wave B. There is also other possibilities, like a triangle, for example. In a triangle is made of corrective waves. So the ABC here would be the first wave of the triangle. We will go back up for wave B, go back down for a C, go back up for a D, go back down for a D, for E. And I'm just add that back up. Could be shorter, you know, but I, I would expect this to finish end of summer, maybe September. Could last longer. Could last at until end of year. Depend. You know, market maker, I think, got all the interest in making this consolidation last longer. And the longer it lasts, um, the higher it could go after this. So I like the triangle idea because after such a drop, when market is finding balance between supply and demand, test everything, having a contraction here, long contraction that find the equilibrium, and the equilibrium could stop higher. It's really often in a triangle formation that the last wave of the triangle doesn't reach trend line or overshoot it. The only thing that is not allowed is overshoot the previous wave. So that's another scenario. We could also, if things are more bearish and we continue the correction. As I said, really the invalidation of the fourth wave is really the 14K here. So if it's not an ABC here and we're coming down for another low, we most likely and pulsing starting here that will be that could be just the first wave of correction here. We'll have still a bit of a zigzag or flat, but that's starting to be really too much spread to be realistic. There's also the possibility that instead of finishing the third here, the third finished here. Like we would have a wave 1 here, wave 2 here, wave 3 up here, wave 4 and wave 5 here. And the third finished here. And this is a flat. You know, like you got your A, B, C as a A, wave B, and wave C that come down here and could still finish a fifth wave. Usually we expect 1618 for wave 5th, which is here, so we really a lot more down. But it's still a correct way of counting it. And if we take the 261, we are at it. So that's not my favorite count either. I will stay with that. Okay. So now what I want to look at, take another chart, I got some count here, is what we are doing on the shorter time frame. If we are indeed looking at a corrective here, either for an ABC, a flat ABC, either for a triangle, we are looking here for a corrective structure. Corrective structure, we have a lot of possibilities. The most classic one will be a zigzag coming like this. Now we do have a triangle here, which makes things a bit harder to count clearly. Because in Elliott wave, a triangle happens either in a wave 4, either in a wave B, or inside a more complex correction. But here, if we were looking for a zigzag, we should be looking for an impulsive here, for 1, 2, 3, 4, 5. So triangle here give some weight into a scenario that we could have a fifth wave coming down. So I'll start with that. If this is a fifth wave, and we finish here, the only level that will invalidate this triangle from a Elliott perspective is to breach that high. We can't breach wave C, but we can overshoot. We can come here and come back down there. We call that fake out in a classic pattern point of view. Just call that a triangle. But if we finish, for example, here, and this is a 4, we should expect the fifth wave to come at least to the 0.618 and down to around 21K. That's the target of the fifth wave. We take the length of 1 with the fib extension tool, projects from 4. So that's one way of seeing it. And from another way of calculating the target of triangle is to take the length of the higher leg of the triangle and project it from the end of E. And that takes us around 26K. So that's a way of seeing that triangle. As I said, a triangle could also be a wave, could also be a wave B. In that case, you will have a wave A here, and the triangle will start only from here with a A, B, C. We will be doing a D and an E coming back down. As says, the E could stop just here, and I showed it. In that case, we would have an ABC here, and this could be just part of just one leg of the correction we are looking. Remember, we're looking for a large B here that come above that high. So maybe we do an impulse that overshoots a wave C that overshoot the 161.8. Maybe we don't, or we stop here or here, I don't know. And in that case, we could have, I'm gonna add this one. For example, we stopped here. We could really well have wave W here and coming for X and still have a Y coming up here. Or could be even something else. But could be also a flat, but a flat, if that's a flat, it will mean we would need to come back down really low here. It's not impossible. But for now, that's a two possible way of seeing this triangle. But it's not necessarily a Elliott wave triangle. You could just be doing a 1 here, a 2 here, got a sub 1, a sub 2. We will be going for 3, 4, 5. And that could be maybe not up here, maybe more shallow. and that could be just a A wave, a zigzag, a B, a C, and that will complete a big B wave. That's a possibility. There's really not a very clear pattern right now, because when we zoom in, yeah, and try to count the little subwave, it's not clear. We do have here, because this part we have something that look like a short ABC. I don't know how to count this as 5. It's possible. It's really not clean. The same way I show you earlier on the law of 2018. Often at the law, the wave count are not really easy. And here you see we also have something that look like really clear 1, 2, 3, 4, 5. And here, yes, and it's really not evident. We could say we have a B. It don't come in a full C. So maybe we have a 1, 2, 3, 4, 5. And here the same. We do have a clear 1, 2, 3, 4, 5. So that's the iffy part, because we can't have impulsive going like this. It's necessarily corrective, or you can have impulsive, corrective, impulsive, but you can't have corrective, 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 like a triangle with only corrective waves. But it's, yeah, maybe we do have something like a small impulse here, and we have a flat correction here, A, B, C. The same thing here, an impulsive and a corrective here, A, B, C. Because really these two parts look really impulsive. Oh, it could be that the fourth wave finished here and we're doing 1, 2. Yeah, 1, 2, 1, 2. I don't know. There's many possibilities. That's why Elliot is good to give you the idea, the idea on the big picture. But right now in the lower time frame, it will not help you a lot. There's one thing is, if we start to lose this low here, it kind of invalidates most of the bullish scenario. This low is really the invalidation point for this triangle. Remember, the only thing that is forbidden is to go below this point. If this is 1, 2, 1, 2, same, we can go below this. And anyway, from the rest, the other thing we can analyze, this slow shouldn't be broken. That's why I will come on a classic level chart and take a look at here. We do have a high volume node here where we are. We are above now. We break the market structure. So yeah, potentially we have a 1, 2, 3, 4, 5. Which means we could still just, yeah. But right now we can see how this daily acts as resistance here and here. Daily level here. This is node level. We do have our 200 daily AMA here at key beer bull level, which should be defended by beer. Bear, not beer. Oh yeah. If we start to now we claim the first important level. That was resistance the past day, resistance here, resistance here. Here we look like we are claiming it pretty strongly. We do have a weekly here. This is a daily that got my interest right now. It came around the triangle trend line. Yeah. If we claim that, become really likely we start to take the daily, and if we come up here, I would think we claim it. After we can still make pull back inside, but if we claim that level, it look likely we will go up at least to the weekly here. And we have a target that I showed the Monday report. And yeah, I will do a radio wave update anyway when we get a break of this triangle. So just to summarize, I could see still a fake out of this triangle and a last wave down, or a fake out of this triangle and a big impulse down. But overall, I'm mostly expecting a upward continuation. Well, we'll see. Thanks. See you.